Hello, everyone, and welcome to the ADSS podcast. The wait is over. The Fed has finally announced a 50 basis point rate cut, just as the market has been pushing for. Today, we'll explore the FOMC rate decision and what it means for the economy moving forward. And I'm excited to have Srijan Katyal, our head of strategy and client services, here with me. Hello, Srijan. How are you today?
Hi, Mahmoud. I'm good. How are you doing today?
I'm pretty well, thank you very much. Well, we've seen what's happening in the market recently. The FOMC, the big event, the big risk event. So the market, let's start before the meeting. The market has been anticipating either 25 or 50 basis point rate cut. So why was all this split in the market?
The split has been everywhere, to be honest. If we see the market, as you said, 25, 50 basis point, there's been a lot of discussions around that. Internally within ADSS as well, if you think of it, the sales trading team, we had 50% going for the 25 basis point, 50% going for 50 basis point
Right.
as the rate cut. What's surprising is that wasn't the case with FOMC itself. If you
Yes.
see FOMC, if you see the Fed Reserve on its own, they had 9 votes that favored the 50 basis point, while only 1 vote favored the 25 basis point,
Yes.
which was very surprising, given that was there a big need for the 50 basis point rate cut altogether right now? It's a bit questionable, but it's done and we are at it. And I think it's just to avoid that hard landing that might come through.
So you think that the 50 basis point came to avoid any hard landing scenario?
I think it's also to do with the elections. There's a lot of uncertainty that might be coming in the next couple of months.
Okay.
And what that uncertainty could lead to is that hard landing, which is something that Fed is really focused on not having for the next couple of months or quarters. So it is surprising, but the only explanation that I get out of it is probably to avoid the hard landing scenario that they don't want at all.
So obviously the Fed is somehow satisfied with the trajectory of the inflation rates, and right now is focusing more on the job market.
I believe so. But I would say that's also surprising. That's also shocking in one aspect, is because when I was looking at, so yesterday before the decision came out, we were just internally looking at what has been the situation in the past.
Mm-hmm.
If you go back to September 2007,
Okay.
inflation back then was just 2%, and unemployment rate was at 4.6%.
Okay.
So at that point, when they cut 50 basis point, it made a bit more sense to us, given that inflation was at their target 2%, unemployment was much higher at 4.6%. If you see the scenario right now, it's not the same. Currently, inflation is still higher at 2.5%, while unemployment is actually lower at 4.2%. So it's a bit of a tricky situation. It's a bit of a surprise that despite all of that, they've cut 50 basis point. And one thing that came out of that study we did internally is the fact that inflation rose from 2% in September 2007 to over 4.3% in December 2007.
That's very interesting scenario.
So with that rate cut, is that inflationary pressure coming back?
Possibly, yes.
Possibly, yes.
Yes. So that takes me to the next question, the Fed dot plot. We've seen in the Fed dot plot that the Fed might cut by 50 basis points until the end of the year. Even there was a split also within or among the Federal Reserve members themselves. We've seen that the Fed dot plot shows us that we have 10 members favoring against 9 members. So we have a very thin majority. So do you see that we might see a 25 basis point instead of 50, or maybe 75 basis point instead of 50 until the end of the year?
I think what would likely happen is that we'll see a 25 basis point and then another 25 basis point.
Mm-hmm.
That's what is being priced into the market right now. But one thing can change all of that is the result of elections.
Yep.
Now, obviously, with one candidate coming in, there could be a lot more inflationary pressure. And if that happens, then...
You mean Trump?
Trump, yes. If that happens, then of course it means probably lesser rate cut
Mm-hmm.
is can be anticipated.
Mm-hmm.
While the other one, of course, with Harris, for example, things might remain as it is, but there might be less of inflationary pressure that might be coming in. So elections would determine what exactly happens, and can actually lead to being the cause of what exactly happens. But as of now, I think markets anticipating a 50, which is going to be in two tranches. 25 basis points probably in November, 25 basis point in December.
So do you think by the end of the year, so we start with the 50 basis points, and if we follow the dot plot, another 50 basis point, 25, 25, do you think that we have somehow avoided a hard landing?
I would assume so. I mean, if it's 25 and 25, given that we are already at 1% rate cut, it's a good situation to be in. I think it's also, of course, a lot of geopolitical situation, what happens back over the next couple of months, that will also help understand what happens with the soft landing or a hard landing. But yeah, I think it would make sense. It would be better, and there would be a more likelihood of a soft landing if things go in that trajectory.
Right. And obviously, well, taking the elections apart, we are seeing also in the same dot plot a possible 100 basis point in the next year.
Yes.
So that, as you said, could reduce also the probabilities of a hard landing significantly.
Yes. So that's expected. We're expected to see, I think, 4 of them with totaling up to 100 basis points, so 25 basis
Correct.
points each, over the next year. So it's a long time frame, and but that's what's, as per the dot plot, that's what's the expectations. And I think we'll end up at about 3.5% of
Yes,
interest
by the
rates.
end of the year, and probably 3% until 2026.
That's right. Yes.
Also, I wanted to ask you about the US dollar. We've seen that the DXY has tested a multi-month low yesterday, probably its lowest level since July 2023. So where do you think that the US dollar is heading to?
See, with the dollar, I think in the last couple of months, obviously we were at around 106 level on the dollar index back in July. So we are already in September. It's just 2 months, and we've already seen it around 100.7 right now, as an example. That is the market pricing the rate cuts.
Okay.
That is just the market pricing the rate cuts and what is expected in the next couple of months as well. With further rate cuts, do I see dollar to be strong? Probably not. I think it might be able to sustain its value, but there is a possibility for a further weakness also.
Right. So we can see more sellers or more bears joining the market at the moment.
Yes. And it also stems down to what the expectations are in the next couple of months. I think once we see November, if we see a 50 basis point rate cut, that's going to be a big challenge for dollar. We don't see it holding strong then. However, if we see another 25 and 25, I think dollar might be able to sustain its value, but I don't see any upside correction as such.
So you say that right now the market probably focus is going to be on the NFP reports for the US dollar.
Yes.
Okay, and what about sterling pound?
Sterling pound is an interesting one, actually. If we see Bank of England, the way they have been taking their approach towards rate cuts and the way they've been taking their approach towards the whole policy has been very different and very cautionary also. I think it's a lot to do with the inflation problem they have had in the past.
Yes.
All of the Western economies have had inflation, which had to be catered to, which had to be targeted, which had to be brought down at the earliest, and all of them have taken the approach towards that. It's only if you look back 2022, 2023, Bank of England or UK had a much longer patch of inflation.
Yes.
Keeping that in mind, I think that's why their approach has been a bit more slower, a bit more cautionary.
Right.
And that's definitely helped the British pound.
Okay, and also we can see if we want to compare the rate differential between the sterling pound and the US dollar. On one side, we've seen that the US central bank has started with 5.5 and it might end up with 4.5% until the end of the year. But the interesting thing, as you said, the Bank of England started at 5.25 and might end up with 4.75.
Yeah. So probably higher than central bank of the Fed, basically.
Indeed. So let's move to commodities. Let's talk about the gold. So where do you think gold is heading? Do you see that gold might hit 3,000 dollars per ounce next year, anytime next year?
Probably the trajectory, the force it's been on in the last couple of months, last couple of years, gold is definitely the sought after product across the world. And it's funny to see even central banks, it's good to see rather that also central banks are getting involved. The reason why I think central banks have been heavily deploying their deposits, their foreign deposits towards gold, is a lot to do with what happened in US and between Russia and Ukraine, and how Russian foreign deposits were tackled, or were there were no accesses given and things like that. So I think if you see that perspective, central bank buying on gold has been on a very high scale, and that's definitely helped gold rise to levels we've never seen before. Every day we see that it's breaking new highs. Every day it's managing to sustain those new highs. uh, if we see Bank of Japan, uh, the Chinese central bank, it's it used to buy about 62 tons of gold every year up
Right.
until 2022. While in 2023, if I see the numbers, for example, Chinese central bank has managed to take in about 224 tons of gold.
Wow.
So it's a big move, and it's obviously to avoid being denominated by dollar only, and to avoid any financial leverage that dollar might have for the US.
So do you think also gold might benefit from, let's just say, Harris has won? Do you think that gold might make more gains through more geopolitical tensions between the US and Russia?
I think that's what's been benefiting the gold, the tensions across the world. I think that's one side of it. With Harris being the nominee, or Harris being the president, eventually, I think it might help the situation for gold. But then again, I wouldn't say the same for Trump as well, because Trump probably he comes in with more inflationary pressure, and that
Correct.
can help the gold as well. So all in all, I see it being a relatively positive trade for positive for gold. And with that in mind, 2650 or $2,700 per ounce makes it very much likely, makes it probable. If we go up to 3000, it's possible. It might be difficult to achieve that in the next year or so, but it would be possible if there's no downward pressure. And I think we've obviously said a lot about September 2007, and we've obviously spoken about 2007 and 2008, how markets reacted back then.
Yes.
If such situation arises again,
Mhm.
initial reaction for gold has also been negative.
Correct. That's going to make the Fed refrain from cutting rates, or possibly
Yes,
pause its cutting rate cycle.
exactly. And what that would, if that happens again, if that situation were to arise again, as much as everybody would prefer to have gold as a safe haven, let's be honest, when it comes to safe haven, it's the dollar in your hand, it's the currency in your hand that actually makes a difference. So keeping all that in mind, there could be certain correction for gold, again though limited correction. I wouldn't see a substantial one.
Right. So before we end our episode, I wanted to ask you about the most common question you receive from the ADSS clients, since you are in direct contact with them.
So the clients have predominantly been asking us two questions, which thankfully we've covered today. One of them is about the Fed dot plot.
Okay.
What is expected in the next couple of months?
Right.
Everybody is exposed to dollar. Everybody needs to know about dollar, regardless if you have indices, regardless if you have gold, regardless if you're trading euro or any of the other commodities. Exposure always comes around the dollar, and that's the main concern. That's the main talking point we've had in the last couple of days. Outside of that, the second most favorite question that I've heard is what happens to gold? keeping in mind the Fed dot plot, keeping in mind what's expected in the next couple of days with the elections and the geopolitical situations, what is expected of gold, where do we see it? So when you ask me the question, will it go to 3,000? I get that question quite often as well.
Srijan, it's been a pleasure to hosting you today, and I'm looking forward to seeing you most often in the ADSS podcast.
It was really good to be here, and it's really good to share ideas around it. So thank you for your time, and looking forward to seeing you again.
Well, that's it for today. Don't miss out our next episode where we'll discuss the latest market development, and be sure to subscribe and follow us on social media. And if you have any questions, please share them with us at ts@adss.com. Thank you for listening and see you in the next episode. Stay safe and trade wisely.